Right, so. Been a while. Been a while since I've been in the public eye. Pretty much came away from sort of my old PardoFX trading group, really quite a successful group, but quite small. The amount of work I put into it was like beyond reason. Far too much work I put into it. So sold my Mustang, bought a family car, had 2 kids, sort of done a little bit of trading in the background for the last 3 to 4 years. Had end of last year, thought, you know what, I'm going to have to actually do something with these because I've got some skills. I'm actually going to do some of it. So thought I'll do a £2.5 grand account this year. I'll grow it as much as I can. Because what I've done in the past is I've just had an account and I've just taken money out after a bit, and just carried on doing like that, spend it on stuff. But I want to get serious about it. And what I've only just found out is like these challenge accounts, FTMO, all this stuff, prop trading. A few years ago, when I was big into this, I thought it was all a pipe dream. I really did. I thought it was scammers. I didn't know what it was. I didn't put the effort into discover what the opportunities. I thought you'd keep like 20%, not 80 to 90%. So coming back in the limelight, I'm not. I'll have a trading group again. There'll be educational stuff, but I don't want to put as much work in as I did last time. I want to focus on me. And part of this sort of coming on public on YouTube, it's part of the journaling. It's part of the reality. Being able to say to myself, well, that was me. Or maybe some people get some useful nuggets of information, but I want to hold myself accountable for the stuff I do. I don't bullshit. I'll own up to mistakes, and hopefully people can learn from them as I go on the journey. Anyway, the purpose of this, on a Saturday, I'll do this. The purpose of it is, 1, what the challenges in the week, because feedback's really important. 2, what did we look at on last week's market overview, and how did it play out? And that's about it. So without further ado, let's have a look. So far this year, so £2.5 grand account, 11.14% made off of 22 trades. It's actually more than that, but I bought this Edgewonk online journal a few days into the year. So there's a trade on the pound CAD, which actually isn't on here. I haven't added it yet, but a really positive start. And I think the problem with I'll share my screen. The problem with how things have been to start the year is the markets have been sideways. They haven't been sideways, but they've been trending, and we want to trade in trending markets, but it hasn't been. The price hasn't been coming up to the areas that you want to trade in. And what we do, because in the Forex markets, you should always wait for price to come to you. You shouldn't chase price. If you chase price, you'll lose. Essentially, you have to set yourself up for the trade. So, and then that gives you the confidence when it arrives in your area. That gives you the confidence to get in the trade and stay in the trade if that's what you've planned for. So that's what we do, and what I do as a day trader. On a Sunday before each week, go through every pair, clean slate, every pair. This is what I want to happen. Look left for the peak supply and demand, and then look right. What do I want to happen? What do I think is going to happen? And set yourself alarms when price comes into that area. What do you need to see to give you the confirmation to get into that trade? And that's sort of what we're gonna look at now. So without further ado, let's go into the setups from last week. So this is my FTMO account. I made a massive mistake on this. I wasn't supposed to trade it last week. I traded it by accident and luckily made the money back at the end of the week. But what I've got on here is I've got all my trading plans for the week. All right. This is what I saw last Sunday. Okay, and what I wanted to see for the week coming. So we'll start at the bottom. Euro USD. There wasn't much of a trading plan on this. Renko alarm set breakout. Okay, this is what it looked like last Sunday. Okay, and what you can see there, for those of you that sort of don't know, what I do is I'm a supply and demand trader or an on-trend trader. Okay, so it doesn't break the trend. I'm not generally looking to do the opposite. A lot of people look for the swings. I used to look for the swings when I first started. It's a bit of a it's probably not a good way to do it. You trade on trend. So what this shows here is if price comes out and I get a retest on the right, I'm buying. If it drops below this emotional level 1.02 and tests, I'm selling. Okay, and then if you have a look at Euro USD, not much really happened. Okay, so what we're saying is like weekly downtrend. What we've been saying for a couple of weeks is if price broke through, around here, okay, it's probably not going to stop. So it's probably going to hit parity in the next couple of weeks. And we look on the left. You look on the left, you see this. Okay, when it's that bullish on one side, it can sometimes be that bearish on the way down. So that's essentially what we're looking at. But what we said is, here's an area of peak demand. Yeah, what happens here will dictate how we trade going forwards. Okay, and then as you're tracking it, okay, this area on the left here, all the way back. Okay, the place where on a weekly or daily time frame, price is pushed from, prices on both sides, or a prime reversal area. Okay, it's potentially going to dictate the direction of price for some time. Yeah, so when it comes back to there, actually, how do we want to trade it? If I was a day trader, if I was a daily candlestick trader, yeah, you could buy that. Okay, it's a hanging man on top of a demand zone. Yeah, you could buy that if you're a candlestick on the daily trader. That's not me. Okay, what I want to see is, so this is the EMA 17. Yeah, I don't want to buy this. Okay, until it's proven that it's likely to go on an uptrend. So what I want from this is I won't continuate now. Okay, so I'm not going to trade it down. And the reason I'm not going to trade it down is because if I say that's the demand zone, yeah, which is what the line is, why would I trade into it? Yeah, there's nothing common sense about that. You'd rather it dropped through, retested, and then went short. And likewise, if it pushed up, retested, you'd go long on that side of the trend line or the EMA 17. Neither of them things happened, therefore we didn't trade it. Next, we've got your reward, long flag up to 61.8. Need to look for a rejection for the 167 area, alarm set on this, and trend break. Okay, so this is what your reward looked like last Sunday. Beautiful impulse, beautiful flag out. Where's it going to fail? Likely the most, the supply area. So you set an alarm on the place that you expect it to fail or you want it to fail, at least the 61.8, I would say. Probably tag in the top of this resistance zone here before going down. So that's what I was looking for. Okay, and there's that flag on the daily. Yeah, Did it reach as high as we wanted, which is the top of this zone here? No, it did not. And for that reason, it didn't get traded. Okay, so if the market doesn't come to the place that I want it to come to, okay, I am quite happy not getting into that trade. Yeah, so it didn't quite reach this top of this zone here. And if you look, if you actually, I think, go left on this line, okay, and it's very messy. Yeah, wicks out 2 points. Price reversal area really strong. Okay, really strong. Okay, and that's exactly where price touched, pretty much within a few pips. What I wanted was peak support resistance, and I thought, because this area was so strong, you know, such a strong level of support resistance a couple of weeks ago, what I really want is for it to hit this 618 here. Okay, and then I trade it down. Didn't get there, therefore we didn't trade your reward. And this is sort of a running theme, because what we expected to happen, when it happens, it's beautiful. Last week it didn't happen that much. Same with GJ. You know, GJ is going to be a good one to talk about, actually. You know, expecting a short retracement due to peak symmetry and continuation down to TP point in line with trend line. Yeah, so this is what it looked like. We traded it here. That blue portion is, me and Jason traded that down, I think. Beautiful little trade. We'll talk about it in a sec. What we wanted was a retracement up to the 38.2 at about 193.12. Yeah. What really happened with that pair was it actually didn't stop. It just went straight down. But it's a nice one to look at. And this is the whole point of why we do what we do, right? If I look at GJ here, how well the structure lines up. Yeah, and so you only need like 1-2 trades a week if you wait for the perfect setups. If I look at GJ, it really doesn't need to be complicated. Okay, look at that line. Look at that line. And you look at all your prime reversal areas. What do you think? Okay, and trade based on them. So when this, you look on the hour here. So we traded this, okay, peak symmetry, right? So when you get wicks out to here, okay, shift of momentum, and then boom, up, okay, you get the reaction, you don't get a follow through. So if your take profit point was here, okay, doesn't quite reach that. But you could probably, you could probably get out of the trade manually once it starts reversing here. Maybe that candle would be a good one to close in profit. We're after the impulse. We want the reaction based on the price action, and that's a really good move. Therefore, if we're going to buy that there, if we think that's good enough to buy, if we think that's good enough to buy, why on earth wouldn't we sell the other side of it? Because if it's a buying area on one side, it must be a selling area on the other. Yeah, buy low, sell high. There's your buy low place. This must be your sell high place. And we did. Okay, so if you wait for sort of price action, wicks out to an area consistently over a period of time, price moves from this position. So why wouldn't we wait for something to tell us to trade and get in? That candlestick there, okay, is a prime entry candle for a short position. Just based on one line. It doesn't need to be any more complicated than that. And the beauty the beauty of trading like that is, if that's what you believe in, you can have a short stop loss. Yeah, you can have a short stop loss, and that will enable you to get 2, 3, 4 to 1 trades in just one price range. Yeah, whereas some people might hold that for the whole length. I generally won't. Okay, I'll do ranges and compound. Okay, so I might do, what I'd usually do is I'd have two twin trade it. Okay, have a take profit on the first one at that point, and then let this one run, and then have like a couple of EMAs, and when they cross, you know, maybe you get out the trade then, or something along them lines. I don't think my stop loss was that short. I think it was a bit more than that, but this is the one trade that's really made a difference to my account so far this year. In terms of what we wanted, nowhere near. It didn't get anywhere near where we wanted it to. So this is the beginning of the week. That's where it was. It just dropped. Yeah. So it went off the radar quite quickly. When it came back up, to be honest, missed it. Yeah. Stopped looking. Didn't see what I wanted to see. But again, when price came back up, okay, very, very strong area of support resistance. On trend, yeah, you look to sell. And is there an hour candle in there that you could sell that? It's tricky. Okay, you get your price alert, hits that engulfing, sell, wicked candle out, sell. Yeah, so the opportunity was there, we just didn't see it at the time, but that's fine. Euro yen moved dodgy, expecting a shorter trade up to 162 to align with peak symmetry and EMA 17 on the 4-hour daily. Okay, that's what Euro yen looks like, and you can see the EMA 17's coming into play. Yeah, you can see this. It looked beautiful. This was arguably my favorite setup last week. Boom. It didn't want to play though. Did not want to play. So where is it? It's the problem with trading every pair is finding them when you need to. Okay, so you can see that's where we wanted to trade it. Okay, and it did go from there, just a bit higher. Yeah, so slightly frustrating, but there's no entry indication at that point. Yeah, so if you're away from the charts, you've got your alert. Yeah, it might be a little bit higher based on these reversal points. Okay, at that point, or even a little bit lower than that, you don't get the alert to tell you to get into the trade, so you don't take it. And then when the alert does get hit, price pushes through, so it becomes invalid unless it comes back below that point. We didn't get it. Okay, the euro was quite strong last week. That's probably the market telling us that we don't need to trade it down. But it was a beautiful trade setup. It just didn't work out in the way that we wanted it to. Okay, and there's those EMAs coming into play, and what we by the time it actually got there, it was above the EMA anyway, so that might have been an indicator not to trade it. But anyway, it didn't play out in the way that we anticipated, which is also fine. So, you know, you might be thinking, well, how did you get 11% across the first 2 weeks? Well, last week was a dodgy week. It was mostly trade management. If the price market doesn't move to you and what you want, there's no point getting in the trade. There's like 12, 15 different pairs here. Yeah, I will never trade that much. Maybe 3 or 4 will set up in the way that I want them to set up, and when they do, yeah, I'm getting on. What one's this? CAD yen. This was a trade. This was a trade last week. Sorry. Apologize, you hear me chewing. CAD yen was a trade. So 110, big emotional number. Okay, rejected from. So we looked for the buy when it poked above. When it drops through the trend line, it's like it's on for a sell. It's not going back above that 110 level. Okay, I was at work when this happened. Unfortunately, I didn't get in this trade. It's on my loonies. I did get in this trade later in the week though, and I'll show you how in a minute. CAD yen, okay. What we wanted to happen happened, yeah. So it poked above, and when it poked above, okay, we're looking for that retest. I bought it here. I bought it here. It's in my blast journal. Okay, as buying it here. The price action didn't work for me. So as soon as it starts waving around in this area, I'm looking for an exit, because what I want to do. People say hold your trades. It's not always what you need to do. It's like what I expect after a flag is an impulse. So if I don't get an impulse, I don't need to hold the trade. It almost invalidates itself and then starts dropping and dropping and dropping. So it gets to the bottom of the range, it pushes up. Where's it going to fail? Yeah, so we know the uptrend is unlikely now. It's broken out of the trend line. We know it had a weak push above. It's unlikely to be strong enough. You know, it's had 2 rejections here. However, it is likely to push back to that level. And it did. What a trade this is. A third failure at 110. Bearish candle through the trend line. That's your trade entry. Yeah, that's your trade entry. Now, you can trade it higher than that if you want. There's probably a couple of candles there which you could justify it, but in terms of, that's a really good breakout trade. Really good breakout trade. Okay, and then if that was the case, you say, well, my stop loss doesn't need to be that big, because if I'm trading there, I don't really need to put it above the top, because what I'm saying is my strategy is it's failed at 110. If I've got that candle pushing through that strongly, if it goes back above 110, my trade's invalidated, right? So maybe I'll just put it above the structure, maybe a bit more. I don't need to put it all the way up there, okay? Because if price gets back up to, let's say, the top of here, you just manually close it. You just manually close it. You don't need to wait for your stop loss to get hit. You get out of your losers, you stay in your winners, right? So you're putting it there, yeah? A little bit of room above this structure. First range, okay, 2.5%. If you risk 1%, you get 2.5%. But as I said earlier, twin trade, one trade there, one trade goes on. So if you risk 2% on that, that's a 2.5% trade. If you continued to hold it, yeah, that's another 4.5%. And that's a 7% trade if you closed it out at the end of the market. Now that's how we like to trade. But this gave us another opportunity to get in, because the bottom of the range, what happens when something breaks? It retests. Yeah. So this is where I entered. Okay, this is like your random region where you've got this bottom and this structure. So within here really is your failure zone. There's a 618 there which it tagged. Okay, so I didn't really know where the exact place to get in this trade was, and so what I done was I Renko'd it. Okay, so this is Renko. I think it's block size 15 on CAD yen. We have different block sizes depending on the volatility over a 10-week cycle. Okay, so my entry onto this was based on this structure here. Okay, and the way I get into this is I put a trend line alert on here like that. Boom. Okay, and if I get a closed block through that trend line, I get an alert, and it tells me that I've got an entry point with Renko. How cool is that? Now, how we do Renko with PardoFX generally is that kind of thing. And if you put stop loss above the wick and take the reversal, you get a one-to-one trade. So it's not the most, you're not going to reap all of the profit out. And actually, I put my stop loss a bit higher on this because the EMAs were a bit high. They hadn't really caught up. So I wanted to give myself a bit of breathing room. So essentially, I didn't make much profit on this continuation because what I want, like I said, is the impulse, right? So what I want is the move down to there. Yeah. So that was my take profit point, was there. And if that was the case, it's 2.83% or almost 6% if you put 2% on the trade. Plus the top, okay, that's 1-2 weeks profit in one trade. Why do you need more? Yeah. Why do you need more? So as I was holding it, okay, it started slowing, it started reversing. So what I do with impulses, I will generally, and I did on this, run a couple of EMAs on it. So you got EMA 7, EMA 17 here. I think, yeah. Okay, if it crosses, generally you look to take profit. You could even do it on the 5 minutes. Okay, it's just a way of getting out and not losing all your profits rather than price retracing all the way on you, as it did and then dropped again. So you could argue if I held it, I'd be in exactly the same place as where I took profit from, but have the continuation. However, I'm a day trader. I don't want to hold trades over the weekend, so I want to squeeze as much profit out as I can while the week is active. Okay, but that's CAD yen. So that's a setup we looked at. Okay, we said if this happens, we trade it. It happened. I didn't trade it at the top. I traded it at the continuation. I know a couple of people traded it at the top. Great trade. Yeah, great trade. That's the kind of thing that we look for. And if you caught it there, that's your week. You don't need to look for anything else. Okay. Boom. Triangle. Down, up, trade. Bang. CAD Swissy. This was a good one. Long range. Trying to push outside the trend line. 200 EMA hit. Signs of rejection. I think it's coming down. Look for break of trend line and test of supply. Alert off trend line. This is what it looked like. Yeah, bang. EMA 200. Yes, before anyone says it, it's a break outside the downtrend line. It's a range as well, though. If it isn't beating the EMA 200, if it hasn't beaten it yet, I'm not saying it's in an uptrend. I'm just saying it's at the top of the range. Yeah, the last time it came out, it tagged the EMA 200. It's tagged it again, showing a rejection from it. So it's a decent trade, short side. And this is what it looked at like at the time. So a little flag forming on top of the line. A few years ago, I would have bought that. However, if you look back in the past on this range, it does the same thing. In fact, where are we? Where are we? Yeah, there's a flag there. Breaks, flag, up, down. It does the same there. Look, pushes up, flags out, drops. So I didn't have much faith that that actually was a flag up here. And what happened was, because we got in this trade. Broke the uptrend, retested as supply, and we entered this trade. A couple of people are in this, and I think James is still in it. Yeah. So this is a classic Head and Shoulders. Okay, it's a little bit Frankenstein, but there we are. Boom. Okay, there's your level, and I traded it from there. Okay, and I've got a couple of pictures in my journal. I'll show you in a minute. Again, it's a really good risk to reward ratio trade uh, if you apply it properly. Yeah, and bear in mind, if you're a swing trader, this is the perfect trade because it's a big range. It's a big range, and the potential is massive. The potential is to get down to the bottom of the range, right? You know, you're looking at 8%, 16%, depending on how much risk you put on. Okay, and if we look at, let's just go to my journal on Blash. Okay, CAD Swissy. Didn't make much profit on it. I put my stop loss about a bit too far away. But if you look at the screenshots, okay, so tag on the 618 on that shoulder, trend line retest. Yeah, bearish engulfing. Now pushed up a little bit, but the stop's there. The stop's there, so it isn't that high. I just didn't put. I put 0.13 lots on, I think, and it drops. How good a retest opportunity is it there? Yeah, let's have a look at it in real time. Again, add your lines in. Yeah, so you got Head and Shoulders formation. Okay, so when it breaks the neckline, where are you going to trade it? You're going to trade it when it retests it. Boom. Okay, that's a second entry, and potentially you might even fancy a third crack at it. Great trade. Okay, another one. There's a price action trade really. EMA 200 on the, was it daily? I can't remember now. Let's have a look. Yeah. EMA 200 rejection on the daily time frame. Yeah, lovely. Great trade. Okay, possibly going down to the bottom. The only reason I got out of it is because I don't hold trades over the weekend, generally. And also, if you think about the carry on these two, you know, CAD Swissy, CAD is 3.25, Swissy is 0.5, so it's quite a big carry, negative carry on there if you hold that all the way down. But good trade. So we saw it in the journal, okay, and we took it. CAD yen, just while we're here, the pictures for CAD yen. Okay, so you remember I was talking about CAD yen. Okay, there's the entry. Yeah, and you can see I've got a trend line going down to the take profit point, telling me when a brick reverses. I didn't manage it that way in the end. I got out on the EMAs, but a nice, and you can see the EMAs a little bit too high, so I've protected against that. I shouldn't have. I should have put the stop loss above the wick, as I've trained myself using Renko over the years. Okay, I was too conservative on this one, and I didn't get as much profit out as I should have. And there's, you see the original first range there. Okay, and then you can see we're trading this peak on the left. Okay, we want that take profit down there, and didn't quite happen for us this time. Not a problem though. We move on. All right. What's next? Oh, so many trades. The next few are going to be quite straightforward, and that we won't need to talk about too much. So AUD USD, a clear break of the 62 emotional level. Okay, we're just looking for a retest, maybe an EMA 17 rejection on a 4-hour as it creeps back up towards 62. We didn't pay this much thought for the rest of the week because, well, it just didn't happen anyway. Okay, so on the daily, it's still below the EMA 17. Okay, so we're still biased towards a downtrend. However, look at the demand from the past. Okay, we're looking at October 22 is your nearest reference point here to say that's an extreme level of demand or supply. Let's just go back on the weekly quickly. Yeah, so what we were looking for was for it to, because it had dropped below this point, was to come up, test 62, because that's also the 0.62 emotional level, test that level and then drop. And the potential was this wick here. So essentially your next range finishes about there. In terms of long-term trading, you could probably hand pick price reversal points from the past here as your take profit points, but that's the potential that we were looking at. Okay, and well, didn't really happen. Yeah, and as you can see, it pushed through, retested, and bought. Yeah, so actually, that's a good trade up. Yeah, if you're watching it for a buy, it's a good trade up because you've got an impulse out of structure. You've got a retest at the previous levels of supply and demand, which is probably a 61.8. It looks about 61.8. It's not quite a 61.8. It's a 50. Yeah, with there's EMA 17 there, 4-hour. It's on the right side of it. So when it dips, good buying opportunity to go long, take the first range because it's below the daily EMA 17. You probably make some decent profit out of that. Yeah, but we didn't look at the buy. Okay, we were looking for the sell. The confirmation never came. We move on with our lives. USD Swissy, yeah, weekly range. Okay, I said to the guys, hasn't gone far enough. Okay, now it was an interesting week with this pair, and the thing is, these ranges, they look so simple to trade, but in essence, it's arguably some of the hardest trades you can do because it looks so simple, right? It looks really simple. And it isn't, because if this was a 5-minute chart, it would have been, it is a simple trade because you know that within an hour you're going to know whether you made the right call. Because it's not, because it's almost a daily range. It is a daily range. Where do you enter? How long are you going to hold it for? Is it going to be, this failure, this area here? A lot of people would have traded this. They would have traded this candle here because it's a retest of that area as to go short. It's not high enough for that. Yeah, so retail traders would have lost money there. You could have traded that, but it's difficult to say that this is the prime rejection point on this pair because especially with the inauguration coming up, because these last peaks pushed way higher than that. It's a point of interest because if we go back in time, this is the exact point where wicks come out to, on not just one but twice. But I would expect it to push up a little bit more than that. And if it did, okay, if you had that kind of price action there, I would have traded that daily candlestick. Potentially, it doesn't hang around up the top too long, but it's just not quite high enough for that. So what we're waiting for now is the breakdown in the test. So it broke down. Okay, and you see on my journal picture, this is what I'm expecting. If we were going to trade it here, peak symmetry. It'll drop through, it'll test, it'll drop, it'll come back up as a larger shoulder. Yeah, that's what I thought might happen, and the first part played out, and the second part hasn't. It looks like it's going to double top. So if you take that shoulder area, I did trade this and I got out of it quite quickly. Okay, so there's your point. Yes, supply hit it. Buying power hit it underside of the trend line, and it drifted. Doesn't look bullish though. It doesn't look bearish, sorry. But what I done was it dropped through, it tested on this little candlestick, and I entered on that tiny little doji, almost a doji there. Yeah. And then saw this and then got out. Tiny bit of profit, because the price action isn't what I want to see for a strong push down. Even this is better price action. At least it's actually going generally in the right direction. But what I was seeing was not bearish behavior, therefore, and exited the trade because I didn't get the impulse that I wanted down to the bottom of this shoulder. Okay, a nice impulse, boom, take profit, thank you very much, bounce back up, go here, sell it again. That didn't happen, got out of the trade. And actually, I wouldn't be surprised if a few people I know took that candle, but the price action isn't good enough for me to trade it there. This looks like it's going to at least double top. What I think will probably happen next week is it will go higher. Okay, so that may even be a free drives. Yeah, you might be looking for the third drives there. Anyway, that's on the market overview tomorrow. That might be something to look at. Okay, what's next? UCAD, right. There's no one watching. I'm just talking to myself, and I will eat this hot dog, even though it's really, really cold. I got a bit ridiculed for UCAD in the group last week because I was still holding it. This is an easy buy. It's an easy buy. Look. Why wouldn't I still be holding that? So this is my missed opportunity this week. Is I got out of this trade because I was holding USD Swiss franc and UJ, and I didn't want to hold three US pairs, especially when one of them was bullish. I was buying, and the other two I was selling. Yeah, that was the wrong decision. Anyway, that's the EMA 70 on the daily. This is a flag pattern. It's a really strong bullish continuation pattern. Okay, it's been happening, and to be fair, it's probably more of a range than a downwards momentum gathering flag, but still, there isn't anything to tell you yet that it's a short. So when we said you can buy, yeah, absolutely. And so what did I do? I bought it when the opportunity arose. So I'm going to guess that. I should say as well, I've just changed brokers, so I've changed all the charts. I'll show you why in a minute. Okay, so I bought that candle there. Yeah, based on top of the buy line, top of the bottom of the range. Yeah, so you're low here, you're low here. That's how we work, Blash. You know, you've got the EMA 17 confirmation on the daily going through. Just because it's below the confirmation on the daily doesn't mean it's not important, because don't forget the daily EMA 17, one of the things we look for is rejections through. So what you're trading, if you trade here, is a rejection through that EMA on the daily time frame. This isn't the daily time frame. So when we have it there, we want a rejection through it at the end of the day. At the time, it doesn't really matter that it's there. If you want to use it like that, then use shorter time frame stuff. Anyway, got in it here. The news happened, and it pushed big. It's now pushed out the bottom of the range, and the reason we were buying it is for the same reason really that we were selling AUD/USD, because over the course of the last few years, look at the weekly. Okay, we're looking at wick fills. Boom, boom. Yeah, it's already happened twice at the same point. Why on earth wouldn't it happen again? And then easy short. Yeah, it's now breaking into that final piece of the puzzle. So, it was a buy all day long in my book. Yeah, boom. Unfortunately, I exited for the news, and I got a little bit of profit, but not very much. If I'd stayed in that, my 11.414% would be considerably higher than that. Anyway, such is life. We move on. It's a good trade though. Yeah, looking for a range completion on UCAD after rejection of EMA 17. We'll buy from bottom or top of range after breaking. Yeah, and this is the shots we took at the time. Okay, there's a break up and test but trade, and okay, this was price coming down into the area that I wanted it before going, and there we are. Great trade. We're getting there. New Zealand USD is very similar to AUD/USD, so there's not really much point talking about that one. Euro New Zealand, never-ending flag, potentially be rejected from peak support. Looking for the first trade lower. This is also the 618 area of the whole move down, which could be prime, can be aggressive. Yeah, that was what I was looking for. 618 there, bang. Didn't get the opportunity for that. It just went down. Just went straight down. Yeah, it didn't even give us the opportunity to enter this one. In fact, I might just change that to Pepperstone. See if my stuff's still on it. It's not really. So it's up about here somewhere. There it is. That's the bit we're looking for. It didn't go high enough. It didn't go high enough. We were looking for that, but when market opened, it just closed the gap and dropped. Just missed it. Good move that. Yeah, good move down to the bottom of that range. Missed it, and now it's throwing out price action that I really not interested in. So I might be avoiding this one next week. It's almost like consolidating down for another up move. I don't know. I'm going to take a bit of time for me to figure Euro New Zealand out, so I'll probably stay away. New Zealand Swissy. I'm going to have another bite of my hot dog. Right, so I'm going to blame Pepperstone for this. Look at this consolidation zone on Pepperstone. Okay, this is my broker as of last week. Each day at 10 o'clock, the market opens or reopens and price drops on the low liquidity pairs such as New Zealand Swiss franc considerably, and then pushes up to close the gap. that might have been completely different if I'd traded using the FXCM chart, which looks like that. How much nicer is that? Without these 10 o'clock in the evening opens, chaps. That's so much cleaner. So I've now changed to FXCM. But anyway, I digress. And the reason this trade's important is because so it broke out the structure, looks set to go way lower, alerts on the 4-hour and the daily EMAs. But if I go on to my actual journal on the FMTO trades, I took this trade, but I took it by accident. I swapped around MT5 and C Trader and opened a trade on the FTMO account, a 0.05 lot size, by mistake, and then chased it. Look, okay, so you see that breakout at the bottom of this range here? I traded that breakout candle. It's a good entry, to be fair. Yeah, this doesn't really matter on the left here because, well, that's what happens every day on Pepstone. I traded it short and it went on the biggest uptrend ever. But then when it got to the top of this range, I traded it short again. Billy Big Bollocks here, you know, with my FTMO challenge account. It's all right. I've got it short. It's going to go short. There's not even the right candle confirmation there to go short. So I don't know why I've done it. Mindset lapse. Yeah, because of this mistake. And then to cap it all off, yeah, I manually closed it on the way up, probably about where my cursor is now. It didn't hit my stop loss. My stop loss was higher because I had that much room on the FTMO account based on the risk that I'd placed. I could place my stop loss way high, and I manually closed it, and it still wouldn't have hit my stop loss. Wrong. Good trade opportunity, wrong execution. And I think in the end, I took this on the I took this on the $2.5 grand account as well, and lost it. Not as bad, but still had areas. This was a revenge trade. Okay. Still thought it was going down, but so that's what the setup looked like. Pretty much market open. You see the EMA is tracking lovely on top of these candles. So as it was pushing, I obviously broke out, traded it down from there, came back up. Here came back up, and you look at this little rejection point on the left on this peak. Okay, we're now looking at that here, and I traded this candle here to go short, and I think it's a pretty good entry. Unfortunately, after this new day open, price came back, and what happened is, even though my stop loss was quite high, there's so little volume on this pair that the news happened, and even though my stop loss was above the peak, it took my stop loss. So that's where I traded it, around here. Okay, but my stop loss was above the peaks because I was, I wanted to hold it for a while going down. Price came up. It must have been, yeah, at half one or whatever it was on this candle. My stop loss was tagged, and it must have been lower than that, but it was tagged, but it gapped, so it went over where my stop loss was and took me out of the position in a loss, even though I think it must have been a break even at this point. So instead of being a break even trade, it was a loss. But that's one of the risks of trading low volume pairs, I suppose. New Zealand Swiss franc has been bane of my life, waiting for this flag pattern to complete, and it's still ongoing, but it does look bearish. Okay, so I was really happy with this when I got that entry point, because I thought that'd drop, because it's almost like a double top on the end of this flag pattern. I think it will go down, but it's just not going to be as quick as I originally hoped. Okay, what was our next setup? What else have we got? New Zealand Swiss Pound CAD. We don't really need to talk about Pound CAD. We can have a quick look. The reason we liked this is because this is a lot longer video than I thought it would be. Pound CAD. So uptrend line. This might be a weekly uptrend line. Nope. Okay, so there's the three tags, and this is the flag beneath. So what we were looking for at the time was rejection on this tag, okay, on top of this small price reversal area here. Okay, so you're essentially looking at demand. Does it give me a signal to go long? It didn't. It pushed straight through, and now it's returning the signal short. Okay, so the EMA 200 was one reason why I could potentially buy it as well, because we see when it drops and rejects through the EMA 100, EMA 200, okay, it will bounce up. It didn't. That's a bearish indication. So I feel like you could have looked for the short here. You still can look for the short here, really. Yeah, because I don't think it's difficult though, because you've got this bottom and it is that bottom. So if it turns into a range, all of a sudden you're selling it at the bottom of the range. So I would suggest it's a tricky short from this position. It may well go down here, but it's tricky. You might, if you think this is going a lot shorter, to be safe, you would probably have to wait for the peak symmetry like this to happen, okay, before then taking that short. That's possibly the only way to do it. This may well go into a range. Oh, and the last one was arguably the nicest trade of all. Ord yen. Flag pattern, like daily, weekly flag pattern on the Aussie. We wanted a retracement up to get a continuation short. And this was mainly, there's a lot 197.654 is my point at which my alert's set. I'm going to get into that trade short. The real reason for getting into this is because the Aussie looks so weak and the yen looks so strong positionally. And I think, even though I didn't get in for whatever reason, probably work, I think this hit that exact point. But I can't find the Aussie. So what place did we say? 9765. It did push a little bit higher. So what we told ourselves was when that point's hit, you're looking for an entry in short. Okay, and this is based on going back in the past and looking at sort of peak supply and demand areas. And lo and behold, that exact line, there's two rejections there. There's a bearish engulf. It's not even engulf. It's a bearish candle there to take. If there's the EMA 17 there, there's many reasons to get in that down move, and it's a nice trade to the bottom of the range. It probably didn't follow on as much as I thought it would, but there's a reaction there. And if it fails at the bottom of the range, well, you adjust appropriately, and that looks like it's going to buy again. Yeah, so I really like the setup. Again, it done what we wanted it to, what we expected it to. Okay, the trade didn't follow through, but you would have found a little bit of profit in there. And that was all of the planned trades. Now, what we've also got is the unplanned. And it's something I was looking at all week. There was another trade that I impulsed in. This was almost a revenge trade as well. Strong supply trade, price hovering below before news. Shouldn't take news, but when it sets up, it's difficult not to. Isn't my rules. What are my rules now? Where's my entry signal? There's really very little confirmation on this one. Closed at minor proper profit. Could have held though. Closed when price went through the shoulder. So I just took a trade at the top before news. Now, really strong supply, but that's not me. I need more than that usually. I did Renko brick it, but really I need more than that. And so when price pushed through, I thought, right, okay, I'll expect a shoulder. If it comes, I'll put my stop loss above this shoulder, so it doesn't get tagged out. If price pushes beyond the shoulder, I'll take it. I'll take the small one because then it's going against my plan, and that's what happened. But shouldn't have traded it. Revenge trade again. So that's one of the others, and there's two more. No, there's three more. Odds Euro Swiss franc. Okay, it was a nice little short. Favorite trade of the day. Simple. Followed rules and in good profit before my break even got stopped out of market close. And that's the jump in spreads at 10 o'clock. Oh, I didn't actually put any screenshot. Oh, yeah, I did. So a nice range, break of trend line, look for an entry short, took that candle, decent entry. Okay, it was going down nicely. This didn't play out anyway, I don't think, or still in play. Yeah, price action is pretty rubbish on that, to be fair. So there's my candle. And at whatever, 10 o'clock, maybe the next day. No, it was this day. 10 o'clock here. Okay, this little white hanging man there. 10 o'clock, I was at break even. It took me out of the trade. I moved to break even far too quick on that, to be fair, but I don't like going to sleep without safety, to be honest. I don't know why. That's the Euro Swissy. Another lesson learned there. And last but not least, the most fun one of all on Friday was really nice trade. Pound New Zealand. Confidence retracement with the EMA 17 tag and the candle close. Day two, still holding, thinking of closing, pushing hard. Nothing wrong with the trade though. Possible added, position added on the 61.8 rejection and supply from October 24. Loved setup, didn't play out in time to really profit. Whipsaw down Friday, was emotional. I watched the trade all day, which needs to stop. I had no intention of closing early, so set alerts and leave it. Stop loss placement was superb twice. So crazy. This pair was crazy on Friday. Boom. Yeah. Boom. So that was the entry. Okay, it was midweek. A tag of the EMA 17, a tag of, well, almost hit the 618. Good enough for a move. Good enough for an entry using Blash. Took it and then held it for the rest of the week. Okay, and then it did come up to the 618 properly. Took another position out at the higher. There wasn't no risk management issue. I scaled the position rather than adding extra risk. at the 618 point, I thought, you know what, this is a really good time to enter, get the money back on FTMO as well. So I entered on FTMO to get my money back that I'd lost on the New Zealand Swiss franc error earlier in the week. Okay, nice rejection candle to get into a trade. Did so. Stop loss above the 78.6 using Fibonacci is a good way to place your stop losses if you still want to be fairly aggressive. And it's just as well I did, because twice, boom, boom, it went up to that stop loss. Probably 10, 15 pips, which isn't much on pairs like this. Before the stop loss, yeah, it reversed. Thank God. But that's why you manage stop losses effectively. So it was Friday afternoon, going into Friday evening. I needed to get out of the trade. So when price came to the bottom and didn't push through, if it doesn't pulse through, I'm taking money out. And it didn't, as you can see here. Yeah, so when the news hit in the morning, it's really bad news for Britain. Boom. I expected this to go a long way. I was rubbing my hands together a little bit. I expected it to go a long way. I was very surprised it went back to the top. Very surprised. But even when it gets back to the top, you're already selling it. You already know it's in a selling position. Potentially, you take them. Potentially, you take them. And if you do, you know, that's your day done on just that range, 3.55. Yeah, I didn't think like that at the time. I was working as well. So when it got to the bottom, about 5 o'clock, and didn't push through, time to take your money. Time to take your money. If it pushed through like that and then came back up to retrace to this point, absolutely hold it. But since it rejected at the bottom again, it's Friday. I need to compound my accounts. I don't know what's going to happen over the weekend. Take the money. So I did, and therefore my FTMO account is 0.16% in the green, because I entered the GN trade. But yeah, so that's last week. So what I'll do now is tomorrow I'll have a look at the market for the week coming forwards, and by all means join me for that. The charts aren't really built tonight because I've just changed over to FXCM. I usually start with a clean slate as well. So what I'll do tomorrow is I'll go through all the charts. I'll look for the strongest pairs, or the pairs that I'm going to focus on. I'll have a look at my spreadsheet with my Renko block sizes on, in case I want to use Renko as an entry confirmation. And yeah, we'll go from there. FTMO, I'm really excited for it. When I like actually looked into what it was, I couldn't sleep. I was up all night researching. I just couldn't sleep. The potential is massive if you can trade, if you can apply some common sense principles. The potential there is massive. And so, if nothing else, what I've proven to myself in the last week is that I can manage trades effectively. I don't really get too emotional about the money aspect. It's more the trading aspect, in the sense of don't get into a bad trade. Losing money on here isn't really, that's not really a part of why I get emotional about it. Anyone that knows me will say the same. I just want to know that I've done a good job, and the sort of journaling is so important. There is one more trade. UJ. So I think I want people to join me on this FTMO journey, because it's going to be interesting. All right, UJ. So True Brickwick trade, which is Renko, very similar to GJ, unemotional, profitable, or that's supposed to say CJ. Better with stop this time, moved it for news with the intention of moving it back, mind. Just stop spread out. I know it's dodgy. Currently managing exit with supply break or smaller brick, Renko brick. Went slightly against my rules on exit as Tokyo opened very strong. Eventually did. Should probably do an hour candle to allow wick to form or brick wick. So what that means is, and this is the last bit now. So we look at UJ. It's very similar to CJ. At this point here, okay, this is where I traded it down, and unfortunately didn't get the follow through. So the EMAs are a lot closer here. So my stop loss was quite aggressive. So what I could do was trade it down. Block size 18. Trade it down from there. Okay, trade it down from there, from that rejection of the previous structure. It might actually be this one. It might be the next one. But either way, this is the same. Put your stop above the top. Not as much of a not as high a bigger stop loss as CJ. Okay, and then look to capture the range in complete. I think I had it down to, so what I'll look at primarily is what happened on the left side. So I'm looking at this up move and I'm saying, well, that's the potential before I need to take profit. So, you know, that's what I was looking at, a 5% trade. When price started stalling a little quicker than I hoped, okay, and we got actually a really nice little pattern on the 15-minute chart. So I was looking at this. I was actually watching this because well, one, I was bored, but two, I was looking to trade it short because this was a really good short time frame entry based on this descending triangle, pushing price out the bottom and retesting. And I had FTMO all set up to take a trade short for a potential massive gain from a test here. And I think midway within either this candle or this candle, it was very bearish. And I thought, oh, I'll just put the position on now. My discipline in holding on to the candle close proved I need really good. I was very impressed with it. Not impressed because I've been doing it for years, but if I didn't wait, I would have, because it was late at night as well. If I didn't wait, I would have really regretted it. So once it broke above here, I think I had it on the 5-minute time frame, and how I was supposed to get out was I was supposed to run this and the cross of the 7 and the 17. Excuse me. Okay, here. So if they crossed, I was supposed to get out. So about there. Or if it broke above this line, I was supposed to get out. And what I done was I waited. And I waited and I got out about there. Right? That's profit. You have a trading plan for a reason. Stick to your rules. Yes, if I'm trading an impulse, I want an impulse that lasts. Boom. I don't want this proper retracement coming in. And that's what it is now. That's what it is. We have a potential short opportunity on this to look at for the new week. Okay, and that is what that looks like. So I took a retest. I didn't take the big retest. I was hoping that the big retest wasn't going to come. Looks like it's coming, and we could potentially look for a trade short on that, which I'll talk about tomorrow. So as I'm moving broker between FTMO, not FTMO, Pepperstone, because of the chart issues, because of these stupid market opens, I'm changing to FXCM spread betting account. That's going to take a few days. So I'm just going to be focusing solely on FTMO for the week. Yeah, join me on my travels. Be interesting.